Coca-Cola is one of the best, most reliable dividend stocks on the entire stock market. They are a great company with fantastic fundamentals and are famously a company Warren Buffett has said he will never sell out of. Due to these reasons, I've had a position in Coke stock for basically my entire investing journey so far, but today that comes to an end. In this video, I will be explaining 4 reasons behind this sudden switch and whether I think you should consider doing the same. Anyways, let us get right into it. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. As I mentioned, Coca-Cola is a great business with a very stable balance sheet, so why did I sell out of it? Well, let us talk about that right now. Firstly, Coca-Cola is what I consider to be an anchor position for my portfolio. This means it outperforms during red times even if it is a stock with less growth than I would like to have. Although this has been mostly true for the history of the stock market, Coca-Cola stock has still been shown to waver. Although the stock did beat the stock market during the 2022 bear run, it has faltered recently due to different news, largely regarding Ozempic. Even a small amount of news such as this sent the stock tumbling, which for a company that is normally super stable, this was a big surprise. This shows that although Coca-Cola is definitely a good anchor position, they aren't always as rock solid as they may seem. A better anchor position, in my opinion, would be a defensive ETF position of some kind, because not only does it have defensive quality positions, but it also has built-in diversification that changes over time automatically. This is something I will get back to later when I talk about what I am replacing Coca-Cola stock with. The second reason I am selling Coca-Cola stock is because of their evaluation. Currently, the stock is sitting at $60.39, which is pretty decent, and I am up a bit on my current holdings, meaning I'm selling for a decent profit. However, the other part of this evaluation I want to talk about is their PE ratio. Coca-Cola has a very high PE ratio for the stock that it is. The company is mature and a low growth stock, but due to its notoriety as a dividend stock, the company demands a high premium and its PE is currently at around 24. For a stock that is known for its ability to stay consistent rather than its ability to grow at a high rate, a PE this high is definitely demanding. This is a trend seen with other similar companies such as Pepsi and Walmart, and I've generally justified this in the past, but if I am truly looking for a more passive anchor position, a stock or ETF with a PE lower than 20 is probably closer to what I'm aiming for. 24 for a PE isn't insane, especially considering some of my newer positions have PEs of over 50, but for a stock of this type, I am looking for something a bit lower. As I mentioned, the growth of the stock is also on the lower end. Not factoring in the dividend, the stock is up 26.84% in the last 5 years, which although is low for Coca-Cola stock all things considered, it is still far behind market average as the S&P 500 is up almost 80% in that same period of time. This is a grand underperformance, and even factoring in their above average dividend, this isn't even close. For a company with this much presence all around the world, it has just become statistically difficult for the company to continue to grow and expand without having to expand into a new market altogether such as foods or snacks. However, I don't think Coca-Cola should do this as it doesn't line up with Coca-Cola's drink-only portfolio which they've had for so long. Coca-Cola is an old business and they've already done a ton to grow their products in the US but also internationally, making them a juggernaut. The problem, however, with this is where do they go from here? They already have a market cap of over $250 billion, and for a company that doesn't have huge margins and also has fierce competition, it would be hard to continue to grow this. Their growth has definitely been respectable, but especially now due to high interest rates, their growth has just been only above 6% year over year, which is pretty low considering they have also hiked their prices. Their growth statistics recently have just been relatively uninspiring, which is another reason I have decided to sell it. Now let us talk about the dividend. Coca-Cola stock is known for their great dividend, but just how good is it? In terms of reliability and consistency, I can easily claim it is one of the best of all time. They haven't missed a payment and have grown their dividend for 61 straight years, which is more than many of us have been alive, which is pretty insane to think about. However, in other dividend categories other than their history, their dividend isn't as great as one may think. Firstly, their starting yield, although definitely nice, isn't that fantastic. Sitting at just north of 3%, it is market beating for sure, but loses out to stocks such as BDCs and REITs and ETFs like SCHD and VYM. The dividend growth is also less than favorable with a 5-year growth rate of just 3.4%. Although this is expectable for a company this mature and this large, it is still a bit of a shame to see the dividend increases being beaten by inflation, especially when the starting yield isn't that high, all things considered. In addition, the payout ratio right now is looking questionable with it being around 75%. 15%. This isn't super insane, but it is also much higher than I'd like it to be. I think a payout ratio of 55% or lower is much more sustainable, and their high payout ratio explains the low dividend growth in recent years. Although the history is great, for a company that is known for their dividend, the stats aren't actually all too attractive. Finally, let us talk about what I am replacing Coca-Cola stock with. I am replacing Coke stock with the Schwab Dividend Equity ETF, aka SCHD. This ETF makes a lot more sense for my portfolio in my opinion. Also, it is important to consider that SCHD auto readjusts, meaning I don't have to ever sell the ETF if I am wanting to make a portfolio readjustment, which is good for tax implications, which is something I've definitely been more wary of recently. In addition, the ETF has a lower PE than Coke, with the ETF having an average PE of just north of 13, which is really great. Also, the diversification in my opinion makes it an even better anchor position than Coke, as SCHD is focused on high quality US stocks that should theoretically do alright in a bear market. In both terms of capital appreciation and dividend growth is very impressive, and I think it will handily beat out Coca-Cola in the long term. Lastly, SCHD owns Coca-Cola in its own portfolio. This is something that I am happy with. I still like Coca-Cola as a stock, so having some exposure to it via SCHD, as Coke is one of its biggest positions, in my opinion is still a big plus. Long story short, there's absolutely nothing wrong with Coca-Cola stock in my opinion. It's just that for someone with a long investing time frame such as me, Coke stock doesn't make that much sense. It is still a high quality company and a decent anchor position, but I think SCHD just has a beat all around for me personally. I will still retain some exposure to Coke though, but less so than before, which I think is for the best. Thanks for watching this video. If you agree with what I said, let me know down below in the comment section. If not, tell me what you disagree with. I would love to hear your feedback. Did I make the right choice or did I not? Thanks for all the support recently. I really appreciate seeing the growth of this channel. Anyways, I will see you on the next video. Thanks for watching and goodbye.